Hello and welcome to Yadnya Investment Academy. Today we are going to review and compare top, medium and long-term debt funds, also called income funds, which should help you choose the right fund. These debt fund category compete with bank fixed deposits directly. In these funds, you should invest your money for investment horizon of more than 2 years. Let me first explain the methodology of the review. We will list, review and compare funds on various parameters and rate them by giving green, yellow and red star. Green star means good performance, yellow means average and red means below average performance. In the end, based on total number of green, yellow and red star, you can take a call to buy that fund or not. Before we start the review, we want to inform you that we have come up with our first book, which is on mutual funds and SIP. Book is available on Amazon, Flipkart and other channels. Link is mentioned in the description of this video. Please remember, all the fund parameters we are going to discuss here are based on 5th December 2017 data as reference, and we only review regular and growth plans of mutual funds. These are the 10 funds we have shortlisted for review and compare today. All of these funds are from top 10 mutual fund houses in India and have very healthy asset under management of more than 4.5 thousand crores. And except Franklin Fund, others have been active for more than 7 years, so have seen at least one complete interest rate cycle. So on these factors, we give all of these funds a green star. Now let's talk about their return performances. All the funds have CRISIL Composite Bond Index or CRISIL Short-Term Bond Index as the benchmark. But since CRISIL doesn't share the information of this benchmark, we will compare the funds' performances with their category average. This table here shows annualized trailing returns of these funds, and this one shows calendarized returns of the funds. That means return from 1st Jan to 31st December of a calendar year. Now HDFC medium term has been performing consistently above category average in trailing returns and have also beaten category average 4 times out of 6 in calendar returns. So overall performance is pretty good and hence deserves a green star. Aditya Birla's Treasury Optimizer Fund has below category average last 1 year performance, but very good in long-term trailing returns, especially 5-year returns are excellent. And fund has beaten category average returns 6 times out of 7 in calendar returns. So overall we give this fund a green star for consistent performance. ICICI Banking and PSU Fund trailing return performance is below average in short term but very good in long term. And in calendar year performance have beaten category average 4 times out of 6, and therefore we give this fund yellow star here for below average short term performance. ICICI's Income Opportunities Fund has below average trailing return performance except 5-year trailing return and have beaten category average 4 times out of 7 calendar year returns and hence should be given a yellow star too. Kotak Income Opportunities Fund has been consistently performance near category average in trailing returns and has just beaten the category average only 3 times in last 6 years in calendar returns, and hence we will give a yellow star on this parameter for this fund too. Similarly for DSP Income Opportunities Fund, it too deserves a yellow star for performing consistently near category average and beating category average 4 times in last 7 years in calendar returns. Aditya Birla's Medium Term and SBI Corporate Bond Fund have both performed better than average in trailing returns and have beaten category average 5 and 4 times in last 7 years respectively. Hence both deserves a green star. Reliance Regular Savings Fund has very good short-term trailing return performance with respect to category average but average long-term performance, but in calendar return it has beaten category average only 3 times out of 7 and hence we will give a yellow star to this fund. Now last, Franklin's fund short-term performance is outstanding and it has beaten category average 3 times out of 5 in calendar year returns. We will give this fund a green star majorly because of superb short-term performance. Now let's talk about interest rate risks these funds are taking. Modified duration reflects the interest rate risk, and higher its value, more the risk. For example, 2.4 years modified duration means fund value will change 2.4% with 1% change in interest rates. To know about modified duration in detail, you can check our video on this topic. YTM here reflects the probable returns this fund can give if held till maturity, which is this value. So higher the YTM, more returns you are likely to get. So looking at the modified duration values with respect to category average, these two ICICI funds are taking maximum interest rate risk and Franklin's fund is taking the lowest. And from YTM perspective, we can easily divide these funds in two categories. This is low YTM category and this is high YTM category. So these two funds are taking high interest rate risk compared to average but have return potential below average. So they deserve red star. And these two funds have lower interest rate risk than category average but also lower YTM, which means they should get yellow star. And all of these funds have lower risk and higher return potential than category average, so definitely deserve green star on this parameter. Special mention to Franklin's fund, which has YTM of more than 1.5% than average, which is exceptional in debt funds category. Now let's talk about the credit risks these funds are taking. Credit risk means risk of default by the companies these funds have invested in. You can tell the amount of credit risk by seeing the credit rating of the securities these funds have invested. These credit ratings are done by renowned rating organizations such as CRISIL and CARE, etc. Now, medium and long-term debt category has mix of funds with different credit risk appetite, and we have selected the funds here trying to cover all the variety. Now, these four funds, which had low YTM in our previous discussion, have high credit quality and have no exposure to risky A and below assets, and even have very limited exposure to AA rated papers. So this high credit quality is certainly the reason for their low YTM, because high credit quality means those bonds are likely to give lower interest and vice versa. So we will give all of them a green star on this parameter for maintaining high credit quality in their investments. Now, Kotak fund has near average exposure to A and below rated papers and should be given a yellow star. Rest all these funds have much higher exposure to risky assets and therefore should be given red stars. Particular mention should be given to Franklin's fund, which has about 2/3 of assets in A and below rated papers, and this could be the reason for their superb near-term performance and amazing YTM as well. But remember, there is a good chance that some or other of their investments may default, which may slide down their returns significantly. Franklin has already faced a slide in returns with Amtech Auto and JSPL rating downgrades in 2016, which was clearly evident in their below average 2016 calendar year performance. Now the last parameter for review and comparison is the cost of holding these funds. Now clearly all these four low YTM but high credit quality income debt funds have low expense ratio, whereas all these high YTM and low credit quality funds have high expense ratio, which is understandable as funds which invest in low credit quality papers have to spend more on separate due diligence and audits of those companies, and hence their expense ratio would be higher. So it is not fair to compare these two sections of funds with each other. So if we compare these funds among themselves, these three deserve green star for low expense ratio and zero exit load, whereas ICICI Income Opportunity Fund deserves a red star for much higher expense ratio and even having an exit load. Now looking at this section, these two funds surely deserve red star for high expense ratio and more for very complicated exit load structure. Their exit load structure is such that if you invest in them, you should not take out money before 3 years. Now these three funds also should be given red star for high expense ratio. For being a debt fund and with such high asset under management, we don't like expense ratio of more than 1.5%. This fund should be given yellow star for nearest to average in terms of expense ratio. Other important info to note about the funds is their fund managers. All of them have a stable fund managers except DSP BlackRock Income Opportunities Fund and SBI Corporate Bond Fund, where new fund managers have joined recently. Now, DSP's fund manager Lokik is an old-timer in the fund house and has been managing debt funds with good performance since 2010. So nothing major to worry here. Only little worrying angle here is for SBI Corporate Bond Fund, where both fund managers do not have much prior fund management experience and are very new to this fund. So this is the summary of their ratings on all the parameters. You can choose based on the parameter which is most important to you. For those who are high risk taker and are ready to invest for minimum 3 years, go for Franklin India Corporate Bond Opportunities Fund. For those who want to take low risk but are okay with average returns, should go for either HDFC Medium Term or Aditya Birla Treasury Optimizer Fund. For medium risk takers, Aditya Birla Sun Life Medium Term Plan has the best profile. So that is all we have on this topic. If you have any question, please do write in the comment section below and do not forget to subscribe to our channel for more such videos. Have a great time ahead. Jai Hind.